Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Thursday, the 23rd of August, 2018. We're approaching the end of the week very, very quickly these days, it seems. Maybe I'm just getting older. Hope you're doing well. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Outcomes are random. Remember that. This morning, the market is a mixed bag. Gold is off. It's the laggard today, down $6 or 0.5%. But the Nasdaq's also down just 4 points. That's less than a rotation, really, or about a rotation. 0.06%. The Dow Jones are unched on the day. The 10-year notes up a tick. The bonds are up 6 ticks, and it looks like the dollar is the leader today. I would say allocation is slightly to safety this morning is the way things are setting up, but really it's all mixed. Just remember that yesterday we closed 1 tick above the prior day in the ES on fairly light volume, 732,000. We'll review that in a minute. So, summer trading, summer fun. So that's how things are shaping up. As far as what could be affecting our day going forward, I mean, we got a lot of numbers overnight. France's PMI, German PMI, Eurozone PMI. We also got initial claims. We just got the FHFA housing price index. Ahead of us, we have U.S. PMI services prelim. That could be a mover. That comes out at 9:45, expecting 55.8, and new home sales at 10 o'clock. So 9:45, 10 o'clock Eastern. But also, we got some ECB speakers overnight, and so on. So a little bit of an effect still on the news front. The overall market was mostly sideways, very tight range in the ES overnight, despite the PMI numbers. And also just remember that new trade tariffs kick in today as the U.S. implements an additional $16 billion worth of imports from China. So what does that mean to us traders? It means pay attention to your stream. Pay attention to your news stream as we're likely to hear some things on that. Let's take a look at what we expected yesterday versus what we got. Yesterday, the primary expectation is that the market is likely to test down and then have an impulse up and then ultimately test up at 2867.50. The prior day's point of control, that's the key area we were looking for above. And if it fails, that's if it gets back into the range. If it fails to get back into the range, I expected it to get stuck somewhere in the 2858 area down here. We got scenario one almost entirely. My drawing shows it pushing down to the overnight point of control. Couldn't even do that before it just it basically pushed back into the range early on for a test. Very interesting trading yesterday, very technical, and I felt that it was well projected. The nice scenario, of course, was scenario 2, responsive back to the prior day's low, then impulse down, and then make a run for 48.50 and 44.25, which I think the market is likely setting up for still. So here's what actually happened on a short-term chart, on my trigger chart. We opened just outside of the prior day's, let's kill the zigzags. We opened just outside of the prior day's low, and we became responsive right away. We pushed right into the prior day's value low. So very technical. A pretty balanced day the day before. Value low, then we get this push down, pulls back to the open. Lower low into the 57, 56.5 56.75 stock zone, and it gets this big impulse. That impulse there was quite large. It's 8 points. So now we're looking for a continuation, and the continuation hopefully would coincide with the prior day's point of control, which it did. And by the way, this stock zone was shifted a little bit down yesterday. I shifted it up for today's session, and that's why it's projected on my current chart. But that's how things set up. Saw a really nice setup on the short side, rotate back to the IB. Retest was weak again, and then that played out pretty nicely. We ended up with a profile that has a bit of a weak high, same as the day before, the 2874. 2874 had a weak high as well. But overall, we had a profile that had a normal variation day with balance. So what we've done is we balanced with a lower low, lower high. And if you look at the big picture, so that we can get a nice big overview of what's going on, this crazy composite chart. If you look at the big picture here and what we've done, well, let me bring back the profile. The narrative is we traded the living crap out of this 2720 area. We finally took off. Look at how blunt this is. A lot of dissonance here as to value in this big range from about 2745 all the way up to about 2830 or so. And then we get balance again, and then we have this cutoff point at 2848. 2848 is really an important price to watch, in my opinion. That area is likely to be retested and defended by buyers. And so we move out, and then we get into this new high volume node up there. So let's shift to that. A new high volume node, and that's where we are currently. That's again 2848 right there. And the peak, the most traded price here is exactly where we are currently. It's 28. Let me turn the lines on. It's 28.59 and a quarter, and then this breaking point here is 28.48 and a half. 28.48 and a half to 28.50. Really important on a retest. And my hope for a little bit of volatility and some good opportunity to finish off the summer. My hope is that the market starts to spill over and head in that direction. That would create a pretty awesome opportunity. So when we expand out these profiles, we see that over the last few days, let me kill these lines, too many lines, these markers. So we had this low at 2803. We had a higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So with the higher lows, officially we're one time framing up on the daily, and yesterday ended that. And what yesterday did is it poked all the way up into the prior day's point of control, almost to the tick, and then closed lower. To me, that's pretty bearish. That's pretty bearish. It did so on fairly low volume. The next rotation, unless there's news, is expected to be to the downside, and that's my bias today. We have a big gap below, an untested area to check out. We have 28, 48, 50 on the way down up in here. These are all very prominent and clear targets in my opinion. The overnight session, yet. The overnight session, pretty dull. Dull volume, 124,000 contracts versus 110,000 normal. And the range has been pretty poor. It's like 6.25 points or something like that. So the overnight session giving us a nice taper at the top, nice taper at the bottom, with kurtosis just around the point of the closing price of 61.25 yesterday. with VWAP and mid on top of it. So open, yesterday's open, the close, yesterday's close, and now the point of control, the current session's mid, the current session's VPOC, all on the same spot, and take that, and layer it over the MC point of control in the area of 28.59 and a quarter, and what you have here is a pretty wound up market. And I believe it's the way it's setting up is it's likely to resolve to the downside on a pullback before it starts seeking higher prices. That's the lowdown. Okay. So looking at what we're expecting for today. No, that's not what I wanted. I wanted that. Looking at what we're expecting for today, let's see what we've got. We've got opening. We're opening right on the edge of range in value. Most likely, we still have about 17 minutes, 18 minutes to open. And the expectation is for a pretty nasty open, pretty quiet open. I'm expecting it to weave around, look through the value area. I'm expecting a drift up into the point of control, into yesterday's value high, impulse down, and then the market starts to, once it tests higher, if it does test higher, it starts to tangle up in this 56 area, and then roll over and start moving towards 28, 48, 50, which I expect to be defended on the first test. That's the primary scenario. Just a noisy open, back and forth, back and forth, back and forth, imbalance. But I'll be looking later on for an impulse down. That's really what's going to clue me in to a 48.50. If I can capture short and it falls out of the 28.56 area and gets below the 28.56 and looks directional, you got to hold on to 48.50. You got to hold on for that 48.50 area. Really important area to test. So that's the primary scenario. Secondary is that we open, test up, and push immediately lower and get tangled up, pull back, consolidate, and then drift lower into the afternoon. Okay? 2. So bear scenarios, first and second. Third, I don't know what color I used for the third scenario. I think it was cyan. The third scenario is a surprise, test lower, unable, finds buyers, and then starts to shift up and retest this 28.69 quarter area, consolidate, and then push to the key defense area, which was 72 to 74 right here. That'll be scenario 3. That'll be the surprise scenario. Okay. I'll leave you with those. Just be careful at the open today. It is completely imbalanced. We're trading on top of, as I said, the overnight point of control, VWAP, mid. We're trading on yesterday's open. We're trading against yesterday's close. It's in a local MC point of control. Just a lot of consolidation here, but balance or consolidation leads to imbalance, which then means that we're likely to break. And if we do break, it's likely to be a runner because of that balance, because of all that energy that's been cooped up in the balance zone. That's how things are setting up. My bias is to the short side, but like every experienced and knowledgeable trader, I'm not going to trade my bias. I'm going to take advantage of my bias, but I'm not going to trade my bias. What I'm going to do is trade what the market says it wants to do. So wait for that first push, that first impulse. That's where the best opportunity is. Good luck today.